here we go. 3, 2, 1. I'm going to give it a couple seconds. Lee, can you hear me just to confirm?
Yep. All good.
Awesome. Great. All right, Randy, Lee, let's get into it. Ramesh Fakori here with the IRA Club. Co-hosting with me is Lee Gearhart. I said it right this time,
Yeah, you did.
Lee. And then Mr. Randy Tate. I don't know why I butchered your last name, but don't feel bad. Everybody butchers mine. Nobody could ever say Fakori. So with that being said, I'm super excited, guys, to have you on board. And more so excited that we have a great new product for our IRA Club clients. Many of you that are joining are new. I'm going to say that up front to everybody. And many of you that are current IRA Club clients as of January 1st are familiar with this product, which is our new trading platform. We worked really hard. Lee, Randy, Doug, Russell, Lourdes, Lee, if I'm forgetting somebody, please let me know. We spent over 1,000 man hours putting this together for our IRA Club clients. So we're very excited about it. Before I do, I'm going to go ahead and just start sharing my screen. I want to give everybody a little bit of time to join. I know many of you, like I said, are current IRA Club clients. Just want to make sure you guys could see this. Here we go. Start from the beginning. And what we're going to do is we're going to go over the agenda, quick disclaimers to everybody that is joining us. If you are just coincidentally new to IRA Club, we are a self-directed IRA company based out of Chicago, Illinois. Many of you that have or are listening to us for the first time may have retirement dollars, let's just say a Fidelity, Vanguard, or Schwab, where we specialize in alternative investments. That's the best analogy, like I said, I always like to give about IRA Club. But what we're here to talk about is how to utilize your IRA Club trading account powered by Iflip. Okay, by the creator, one of the founders and creators, Randy is joining us, and I know Kelly would love to have. By the way, Lee, Randy, I would love to have Kelly one time jump on board and kind of give a breakdown. As much as I love you, Randy, I'm not taking away anything from you. I would just love to have Kelly one time, the creator himself, who created the AI Smart Folios, jump on board. But with that being said, I want to get this disclaimer out of the way. And introduce you guys. Remember, we do these webinars for our clients. These are for educational purposes only. What we encourage that you do is not leave all of your asset classes in one specific type, which many of you are familiar with when it comes to IRAs and 401ks. It is strictly and solely, although we are talking about the stock market today, majority of you that have never heard of self-directing. Sorry, majority of you are IRA Club clients, but for those of you that are new to IRA Club, we allow you to diversify your retirement portfolio into different asset classes. But why are we so excited about this is it's a long time coming because we now have a trading platform. Randy knows this better than most. We are sick and tired of money just shifting back and forth here at the IRA Club because we deal with alternative investments. That's always been IRA Club's bread and butter, giving the control back to our clients to do anything their heart desires. But for 10 plus years, all I could hear is me, Dennis, the entire team, and the phone calls that come through from our clients saying, well, what do I do with this extra money that I have sitting here from the royalties or rental income, or the dividends that are being paid back to their IRA Club accounts? And honestly, I just got sick and tired of the money shifting back over to Fidelity, Vanguard, and Schwab. We wanted to create something for our IRA Club clients, which was and ultimately a trading platform. So it officially makes us a one-stop shop, if you want to kind of look at it in that perspective. But with that being said, that is the mission. Remember, we always encourage that you reach out to your CPAs, your lawyers, whoever you're using, your fiduciaries or registered investment advisors. Trust me, we have over 1,000 registered investment advisors that utilize our services. And believe it or not, many of them actually do use the iFlip platform, the trading platform, in particular the Smart Folios, which Randy is going to discuss a little bit later. Randy, you know, me and you go a long ways way now. Yeah, we travel all over the country together. The first time we met, Dennis met you actually. I met you at an event about, I would say, almost 5 years ago now, 4.5, 5 years ago. Dennis met you about 4 years ago. And what really, transpired and the way that our relationship took off was we were at the Money Show, right, in Vegas, if I remember
Yep.
correctly. And me and Dennis, I go, Dennis, you got to meet Randy, you got to meet Kelly. Dennis sat down, listened to your presentation about the AI smart folios. I said, Dennis, this is exactly what I was talking about 4 years ago. All right. And nothing ever transpired of it until about 6 months later. We sat down, we did a little bit more research on this. I kind of flew out, met you, your team, and actually tested everything out, from the get-go, on myself from the get-go without anybody really knowing about it. But with that being said, and we could talk a little bit, later as our presentation goes on, because we want to give enough time for everybody. But tell us a little bit about yourself, how iFlip came, to fruition, and Lee, we'll get into you in a split second, and who you are and how important you are to IRA Club clients. And Randy, take it away if you don't mind. Bird's eye view.
Bird's eye view. Do you want me to share my screen and go into it, or you're going to introduce Lee first?
I actually was just going to go over the agenda real quickly.
Got it. Let's do that. Okay,
so like what we're going to be touching, and the opt-in. You're jumping ahead, Randy, but I love it.
Sorry, man. Yeah, that's how I roll. No, we've been at this for a minute, and it's really, really good. My background is starting businesses and selling them. I've had 2 exits, 2 startups, exit both, and I got the idea of iFlip from Kelly. iFlip is an acronym. A lot of people don't realize that. It's the Financial Learning Information Platform. And the reality of it is that the big banks and billionaires have access to technology that the rest of the world does not, which includes Schwab and Fidelity and those guys. They don't have access to it either. I mean, they're not billionaires, they're just advisors. And Kelly said something to me one time that really just resonated. He said that Main Street doesn't even recognize that Wall Street passes the risk of investing on to them, and they take the benefit. And in those conversations, we discussed how do we take a platform using technology and give it to the average person so they can participate with the effectiveness and the efficiency of an institution. Because at the end of the day, even the alternatives, and we're a big fan of alternatives, we're really an alternative inside the traditional. It's a different animal. It's a different animal. And so when you think about that, like, what do you mean you're normal? Well, as goes the S&P 500, goes everything else, period. That's the backbone of the world, frankly. And so, yeah, that's what we do. Now, in this particular case, you want to talk about this, Ramez?
Yeah, and that's actually, who is this for? And really and strictly, I would say about 95% of people listening, this is for you, the IRA Club members, okay? Randy, Kelly, IRA Club, like I said, we spent hundreds, if not close to 1,000+ man hours having a fully integrated system to provide our clients a trading platform. But there are some added bonuses to it. And one of those bonuses is we are the first self-directed IRA custodian or trust company or administrator, better yet, to offer a AI-driven platform. It does not exist in the space. We're super excited about it. And me and Lee are going to break that down a little bit later. But ultimately, maybe you're just not on the path that you want to be within retirement. Although our bread and butter has always been, please forgive me, alternative investments, a lot of the money just sits off to the sidelines. We're trying to teach you how to maximize it to its full potential. And many of you, just believe it or not, are sick and tired of the W-2 401k plans that you guys are getting. You guys are literally getting eaten alive by fee structures. We're going to also break that down, okay? And lastly, you just want better returns. And that's what Randy's going to talk about. We're going to break down those numbers. So the goal today, and what we're going to be discussing, not only is the new process that we developed for you guys, but understanding the basics of how the AI works. And full disclosure, when I met Randy, I had no idea what an AI platform was versus a robo-advisor. What is an algorithm? That's what he's going to be talking about. Creating an AI-driven smart folios, that's the risk and reward factor, your tolerance. Remember, we cannot choose the stock options for you, the ETFs for you, or the smart folios for you. What is your risk tolerance? Remember, every investment's got risk, but it's taking educated, calculated risks. That's what I say all the time. And how to access, again, your trading platform, and most importantly, fees. And one of the reasons why I absolutely love iFlip's fee structure, because it really follows IRA Club's fee structure at the end of the day. But the first thing that we have to get out of the way, for compliance purposes, this is a new platform. So if you are a new IRA Club client as of January 1st, 2024, this is when we rolled out our trading platform ultimately, you already opted into your Iflip trading account, okay, or your IRA Club trading account. So there's nothing that you have to do from this point on. However, if you're an older client before January 1st, 2024, you have to opt in. So you could either pull out your phones, scan the QR code, okay? Or inside the chat, I already did this for you guys. It was the very first thing that I did. Feel free to click on that link, but you have to opt in. And when you opt in or scan the QR code, this is exactly where it's going to take you, which is this opt-in page. Sorry, it's taking a second to load, but here you go. So don't worry about it. Is for free. We're going to get into that a little bit later, but establish your free IRA account. But all I really need from you and what iFlip needs from you to opt in is your first name, last name, email, telephone number, and your driver's license. Okay. You have to upload your driver's license. So as long as you do that and hit the submit button, please allow for 24 to 48 hours for us to create the account for you. You will receive an email from iFlip just acknowledging that you now have a trading account, and then we will get into how to fund your account and how to actually use the platform itself. So step number one, you have to opt in. And before I get into that, thanks, I am an older member. Good, I'm happy. So that's step number one. Now, something that I want to jump in and talk about real quickly, and if that's okay, and I will put the link in again.
I did it for you. Sorry to
Oh,
interrupt.
thank you. You're the best. I just saw that right underneath as I'm scrolling down. Is please, if you have questions, because this is going to be new to some of you, put the questions inside the Q&A. Okay. If it is a personal question and you want to direct it to me or maybe Lee or maybe Randy, okay, because you guys don't want me to know something, you're more than welcome to go ahead and do so. Everyone's goals and situations are different from the next. And also, if you want to schedule a call for a demo after this webinar, I will show you how to do that. But Lee, if you want to also put that link in there, so everybody has it and is available. And I'm sure Randy's going to go ahead and have that question. David, I saw that you raised your hand on the backside. If you don't mind, you could either direct the question to me in a chat or you could put it inside the Q&A, and we will do our best to make sure that we get to everybody's questions. Without further ado, Randy, I'm going to pass this along to you. I'm going to stop sharing. I want you to go ahead and break down iFlip, what it stands for. Well, you already told us what it stands for, but want to learn a little bit more about algorithms versus AI versus robo-advisors versus Fidelity, Vanguard, and Schwab.
Yeah, thanks, Ramez. And man, I can't say how happy I am to work with you guys. You are my favorite little community to work with, and it's quite awesome. And our product was designed from the very beginning for your customer. It truly was. So in a nutshell, what I'm going to explain over the next 20 minutes. It won't be very long because we're not super complicated on the front. When we set out to build this, like I said, I was speaking with Kelly, who is a former, risk manager over the global risk desk for Deutsche Bank. He had $4 billion of the bank's money he privately managed and traded using mathematics and algorithms. And in that process, we decided, how do we figure out a way to make Kelly and his brain automated and trade for the masses? That's the intent of what we were trying to do. And so what we created was a very simple to use platform that protects. You're going to hear me say this a lot. Protection and risk management is critical. Everybody always asks, I'm going to show you some of the numbers, but everybody always asks, well, what was the performance? How were the returns? Wrong question. Don't ask that question anymore. In any of your investments, alternative, traditional, anywhere you go, ask the question that says, what are your anticipated returns, or what have they been? And what risk was taken to get them? If you only care about returns, buy lottery tickets. It's the best return in the world. So, but you get the point. That's the risk management piece. So, a little bit, Kelly and I told you about myself. That's Kelly. He spent 25 years on Wall Street. literally managing not millions, but billions of dollars. He's worked for some of the most well-known institutions and hedge fund managers in the world. And we really are passionate about what we want to do, which is to empower, key word right there, empower every individual investor to preserve, protect, and grow. Those are really key words. So that's who we are. That's what we're doing. So when we looked at the world, we're like, okay, what are the challenges the average investors face? Well, the retail folks, you guys, really have no quantitative tools or any advanced tech to leverage. You can't get it at Schwab. This is very different than a Schwab intelligent smartfolio. This is not a robo advisor. Robo advisors are just, and intelligent portfolios are just unique names for what's always been done. There's really nothing different. It's new lipstick, same pig. We also know that the challenge of buying and holding is still there. Most advisors, almost any advisor you go to, including robos, are going to tell you, put your money there, leave it. The market goes up, the market goes down. We can't time it or predict it. Therefore, you just write it out. Anybody on this call, if you have an advisor like that, you've been told that. Well, investors using advisors, they're subject to fee structures. So here's the end of the day. I used to teach this. I owned a company that we did business education and training. You got to do one of three things to be successful in business. You got to be better than the competition in what you do. You got to be less expensive than the competition, or you got to make people's life easier. If you can do one of those three things, you can have a successful business model. Well, we set out to do all three. All three is never easy to do in any industry. IRA Club's doing it as well. That's why me and Ramez got along so well. They're doing all three. I look at it like this. If you want a comparison in the way of technology and pricing, ease of use, we are the equivalent of Netflix, and the Vanguards and the Fidelities, they're Blockbuster. And then the little mom and pop shops, they're your local corner video store. Again, same pig, different lipstick. We're very different. So we tell everybody this, it's time for you to take a second look at your investment strategy. That doesn't mean all your money goes into Iflip. That's not what we're saying at all. We're huge proponents. I own a lot of real estate. You know, all my own money is not in Iflip. So I would never tell you to do that. But what we know is this, the volatility is here and it ain't going anywhere. If you're not aware of what's going on in the stock market, it's dangerous right now. Technology is much better than it was even 5 years ago. And wealthy investors and institutions have tools that traditionally you do not. That's why it's time to take a second look. Your current strategy in this space, not the alternative real estate investing or gas and oil, or maybe you're in some PPMs and some private equity deals. That's not what I'm talking about. But your current traditional investment strategy is thinking correct and long term. The stock market's not going to go full speed tomorrow. You're not going to make $1 gazillion. Make sure people understand that we're not a day trading bot or a crypto bot that's going to make you 30% next month. It's not what we do. In fact, those eventually all fail. However, your portfolio, if you have one today and it's invested traditionally, it is most definitely exposed to unnecessary risk. And the fees you're being exposed to aren't all in front of you. Only 3 of the 9 or so fees that is being taken out of traditional brokerage is legally required to be presented to you. So you don't see it, you don't know where to find it, and it's just there. You're paying fees way more than you should be. So here's what we believe. Long-term thinking makes sense. Adding AI technology is what enables the ability to outperform. We have outperformed the S&P 500 since we started, since day one in 2017. And we've done it with a beta, that means risk of 0.5 to 0.6, which means half the risk of owning the S&P 500. Everybody that you talk to will tell you that can't be done. Portfolio protection shouldn't be luxury. It should be table stakes. Everybody should have some mechanism or protection, and the fees got to be fair. It's got to be fair. And today's world won't stand for fees that are not fair. We have a modern society that's very concerned about fair. So that's there. Everything I just told you resonates with the IRA Club, and it resonates with Iflip. it is absolutely the perfect partnership because now you can truly have a one-stop shop. Your money can go from iFlip back to IRA Club seamlessly. We're connected. Money moves almost every day, doesn't it, Ramez? Just
All
about every
day,
day.
every day. All day,
So
every day, twice a day, 50 times a day.
yeah.
So it
So
just
so so there's no extra paperwork. There's no big process. It's as easy as Venmo. So IRA Club, now you're not going to have to go fill out a bunch of paperwork, go to your Schwab guy or your Vanguard guy and get it moved over to the IRA. All of that is done. So we're easier. We're much easier. We definitely make your expenses easier on the IRA Club. That makes it much better for that. So now we're fully integrated. Like Ramesh said, everybody that's become a member of IRA Club since January 1 automatically has a IRA Club trading account powered by iFlip set up. We're happy to be the power source behind that and very glad to be partners with these guys. So now we'll get to the meat. How does it work? Everybody wants to know, how does it work? Well, you see AI everywhere. It looks like it's everywhere. People tout AI in this space. Let's talk about that. Let's just pull the covers back in modern language and see what we're talking about. First off, an algorithm. Spelled it out here nice and easy. An algorithm is a simple process or set of rules. That set of rules or calculations generally can be followed by a computer. Here's your robo world, your black box from the 80s, for those of you old enough to remember those, when people would get them. It's simply an if this, then that. Let me give you an example. The S&P 5 or Apple, if Apple moves 5% above or below its 200-day moving average, buy it or sell it. And then the computer will do that. And that's fine. That's actually better than a human. However, there's a problem with it. At some point, all algorithms decay. They all decay. Every single one will eventually decay. At which point, a human has to go in and change the algorithm and say, okay, we're not going to use Apple anymore, or we're not going to use the 200-day moving average anymore. We're not going to use, percentage of gains and losses, or whatever formula they're using, whatever rules that have been created have to be recreated by, magic answer, another human. That's an algorithm. Algorithm, good. Artificial intelligence is a little bit different. It's machine learning. It is an algorithm. All machine learning, all AI is an algorithm. All algorithms are not AI. Same set of rules. However, these set of rules, these algorithms, this type of algorithm has the ability to change its own rules. It learns as it goes. The way ours works, it's double. Every stock in the smart folios has an algorithm on it. The algorithm every day generates a signal to buy it or sell it. That's it. You own it or you don't. However, that is overseen by AI. We have a machine learning process, several actually, that look at the algorithm every day and say, okay, algorithm, you're okay with that. We agree you can do that. We don't agree, we're going to override the algorithm and say stop, or you're egregious, we're going to change your rules. And that's all done by the machine. It's all done by the AI. That's a huge differentiator because no emotion ever gets in play. It's purely mathematical. And we like to say where protection meets performance because this is where everybody asks, so how does it actually work? How is it any good? Well, here's what we know. If we take this right here and we scroll all the way back from, let's just take right here the trade war forward, okay? This is all live, real information right here. Everything here is back tested. You could say it could be manipulated. There's all kinds of rules around that. We're not even going to concern ourselves with that. What we're going to worry about is these last 4 market corrections. They've been significant. And what you'd see here is that a 20% drop versus a 3, 35 versus 9, 22 versus 4. These are 5 to 10-year events, folks, that you want to avoid. This is the reason people move their money into real estate and alternative investing, to avoid that. You don't want to deal with that. So protection matters. Now, the smart folios work like this. So you can see an example of it rolling up right here. So the orange line is the software. You see where it goes flat? it predicted ahead of time that a downturn was coming, so it pulled people out of the market. December of 2019, before COVID, we went to almost 90% cash. The AI took all the money out of the market. Market went straight down. AI put the money back in March. We will almost never catch the top. We'll also never catch the bottom. The idea is to predict the middle of the market, as you can see this right here. Diversification only happens in small amounts inside the Smartfolio. Our biggest Smartfolio might have 15 stocks, maybe
About
20.
20 now.
20 at the very most is all we're going to have. So this is an innovative concept, because here's the last big myth I'm going to bust for you. If you've ever had an advisor tell you they're putting you in different funds because their intent is to diversify you to avoid risk, it's a common thing they say. It's the most far from the truth you could have. In fact, the more diversified you become, the more like the market you will behave. And if you're going to behave just like the market, none of this matters, including what we're talking about right here. Go get an E-Trade account, buy the SPY ETF, hold it, and leave it alone. There you go. That's the market itself, and that's much cheaper than an advisor putting you in 15 different or hundreds of things sometimes. Yeah, right.
No, I'm laughing because, I actually try to drive this home with our clients. Like I said, there's nothing wrong with having an employer's 401k. Okay. Take the employer match. I'm a huge advocate of that. If they're going to give you free money, take it. But if they're not giving you the free money, I almost sometimes shrug my head and I say, you're not in control anymore. It's gone. Like, you gave that up the day that you got that. Now, the reasons why Randy's talking about that, when they talk about, when you open up an employer's 401k and they talk about diversification, well, their definition of diversification is a mutual fund, okay, which is large, small, mid, international stocks and bonds. That is not Randy Lee's or my definition of diversification. Okay. And the fees that are incorporated, these are astronomical. Just to be clear, we stare at these statements all day, every day. We know what they're charging on the backside. And I'm telling you that the national average of an employer's 401k in the first 5 years is just over 4%. Please Google it. I don't have to tell you those numbers. Go Google it. That's just common knowledge. So I just want you to be aware of that. So if they're not giving you an employer's match, it may be better just to open up an IRA club account and just throw it in this. And this is just my opinion. I'm not saying that you should be doing this. I'm just saying if they're not giving you away the free cash or the cash match, that's up to you to decide. And Randy, I didn't mean to cut you off on that, but I just wanted to really drive that home.
It's so important for people to understand, and you said it perfectly. Diversification does not mean more stocks, ETFs, and bonds. Diversification means asset classes. The stock market is an asset class. I believe that we should all own a piece of the stock market. I mean, I know Ramez owns some. I definitely own a bunch. Lee owns, we all own some, but we can't just say we're going to diversify our risk by spreading it out throughout the stock market. That is not smart. So again, here's the actual performance of the S&P 500 straight head to head through 2022. Didn't update my slides. It actually looks even better now. But through 2022, this is what the difference would have looked like if you'd have started with us in 2017. You'd have put 10 grand in, had flip trade it in the S&P and just hold it. If you'd have just held it, you'd have 16 grand. If you let the AI do it, you'd have 24. It's a significant difference. And you notice it makes all of its money in the downturns and the recovery. That's how it works. Now, that was a very fast overview. I want people to understand the difference, and I want to be able to answer some questions. If you want more information, this is a little different QR code. This one will take you directly to Lee's calendar, and you can book a private demo. We don't do this for everybody. We want to make sure that, because IRA Club is our partner, we want to make sure you guys get all the hand-holding and all of the coaching on the software you need. It will take you 30 minutes to understand how to use the software, and you'll be off and running. It is that easy. I'm also giving you my cell phone, which I no longer pass out to everybody
Are
anymore.
you crazy? I've never seen you do that before. I've never seen that before. Okay.
Um,
Everybody,
so
please take a screenshot of that and make sure you have that. He does not give out his cell number. So,
so
Randy, that is a first. I've never seen
yeah.
that.
Well, this relationship is important to us as it is to you, Ramez, and we're super happy to be here. I was looking through some of the names. I see some people that I know, and I'm excited about where we're going. We're growing rapidly as a company. We grew 20% just in the first quarter alone, and we're just continuing to grow as we grow other partnerships and we grow with you guys. And you take a big chunk of our focus, Ramez. So turn it back over to you.
Thank you, sir. Lee, I'm gonna thank you for the hearts and thank you. Give a thumbs up to Randy. And honestly, keep the questions coming. That's why I'm doing these webinars with Randy and Lee. Honestly, I'm trying to ultimately help you guys. Please be aware of that. And the reasons why we really created this way back when is we knew that the market was going to be unbelievably volatile. 3 years ago, we knew a lot of the individuals that are current IRA Club members were going to shift their dollars from Fidelity, Vanguard, and Schwab over to the IRA Club to do alternatives. But at the same time, we know that the market at some point is going to shift back up. Okay. So we want to be able to have something available for our clients to pick their own stocks, their own ETFs, or smart folios. So that way, it really is, again, I keep saying the word one-stop shop, but that's what we're trying to create for you guys, okay? So if you have a multifamily, syndications, a house on 123 Green Street, the dividends are coming in, the royalties, the rental income, you don't have to go back to Fidelity, Vanguard, and Schwab. You literally could just shift money over to your trading account and go pick your own stock or go pick your own smart folio, and that's what me and Lee are about to talk about. One question did come up in the private chat. Please forgive me. It's and by the way, David, I hope I could answer this out loud. How many other companies exist like iFlip?
You're muted.
Randy,
I
you're
can
on
answer
mute.
it for
Randy,
you.
you're on mute.
Sorry. Zero. They don't
Why
yet.
is
They
that?
will. Well, I'll give you, there's a couple reasons why. One, it's really hard. Um, the people that run and built our AI, first Kelly Korshak, like I said, he went to Stanford's physics program at the age of 16, was handed billions of dollars by multiple institutions across Wall Street. The other person on our team that I don't talk about that much is Tom Woolston. He's our general counsel. He has a master's degree in machine learning. He also is an IP attorney. And together, he and Kelly are the ones that create the AI and the signals. Kelly running the back end with the stock market, him helping with the AI and the signals. So it doesn't really exist. There's a couple of reasons. Our company at full scale, we have about $40 million on the platform right now. If we had $1 trillion on the platform, we would only need 50 employees. So think about that. What does that do to Schwab and Fidelity? And why do they not bring out something like this? Well, it's not conducive to their culture. So we're a cultural anomaly, just like Netflix was to Blockbuster. We're a cultural anomaly. And so, yeah, there's not a lot of us.
All right, Randy, I got a question. By the way, if it's the Mallory that I'm thinking about, she is a registered investment advisor. She actually, Randy, is a friend and teaches IRA, self-directed retirement accounts. So she's asking a question. Do you have a stated annual return rate for the iFlip smart folios? Basically asking the stock average, the annual is about 7% versus iFlip. What is that number? Do you have a breakdown of that? Is that something me and Lee could kind of show when we open up the smart folios?
Yeah, you won't be able to see it there because everyone's a little different depending on start date, and we don't run annualized calendar January 1 to December 31 books. I can pull any of those. I can tell you, Lee, do you know off the top of your head, our
Yeah.
core
So
portfolios we track tightly. Lee will know the answer.
yeah. So like and Ramez and I will probably get into this in a little bit, but as a basic, we have a conservative, a balanced, and aggressive portfolio. So like right off the bat, like the conservative is probably not going to perform as well as a buy and hold of the S&P, although sometimes it does. Like it's designed to do something different. However, like balanced last year, the market that, and when I say market, I mean S&P 500. The S&P did about 22 or 23%, which is just crazy compared to average. Our balanced portfolio did exactly the same. However, we were only invested about 80% of the time. So we still use cash, like Randy has said, to hedge and still produce the same returns in, 20% less of the time. So not to not answer your question, but it does depend because we have 10 different portfolios. The graph Randy was showing about the SPY is probably the best apples to apples comparison of being roughly 125% ahead over the last, 7 or so years.
And Mallory, and Mallory, because I know who you are, my recommendation is to schedule a direct call with Randy. For crying out loud, he gave you a cell. So call him, let him break those numbers down, talk to each other. That's my recommendation to you. Like I said, we have hundreds of registered investment advisors that utilize our services and love the iFlip platform because it's really doing the work for them and their clients. Does my investment have to be IRA money only? The answer is no. You can use cash. I'll give you an example of that in a split second. Randy, you raised your hand. You were about to say something.
I was just going to say one thing to Mallory. Do get a hold of me because we've just rolled out a version of the software for an RIA, a registered advisor, to have a little different view with more depth and understanding of things that the general public really wouldn't have interest in looking at. So,
all right, we just have a positive comment. So I opened up an IRA Club account a year ago. This would be awesome to finally put my money to play because I couldn't invest in a different type of investment. This is amazing. Thank you, and thank iFlip and IRA Club's team. We spent, like I said, a lot of man hours on this one. Jane, the partial funds that transfer to iFlip is still in the IRA account and treated as such tax-wise. Correct. The answer is correct, and we're going to go over that, me and Lee, right now. Can we transfer iFlip funds back to IRA Club? Yes. That's exactly what we're trying to educate you on. And use me, Jane, as the example. I have parking spots inside my Roth IRA. I have 2 syndications. I have a private equity deal. I have a house in Northwest Indiana. All of these things are paying back rental income and dividends back to my IRA Club account. And all I'm doing is shifting it right back into the stock market, right? In particular, I am using the iFlip platform because it is fully integrated. I'm not endorsing iFlip or choosing the investments. I'm just telling you what it is that I do. So these are the ways that I kind of create, or better yet, I have my money working for me with, in particular, my Roth dollars working for me at all the time, at any given time. I hope that answers your questions, but we will go over that. Let's go ahead, and if you are a current IRA Club, thanks for the thumbs up, Jane. If you are a current IRA Club client, okay, Lee, let's go over the process, okay? You're going to go to iraclub.com. For those of you that haven't seen our new website, shame on you, okay? What you're going to do, first step number 1, let me go back to step number 1. Step number 1 is opting in. If you haven't done so before January 1st, 2024, if you are already an IRA Club client as of January 1st, you already have an iFlip account. Now we're just going to teach you how to do it, okay? So step number 1, after opting in, allow 1 to 2 business days for us to create the trading account for you. And remember, you have 2 member logins. One is your IRA Club member portal for really alternative investments, and it still has access to your trading account. But if you want just direct access to the trading account, you're going to click on the second link where it now says IRA Club. You can now buy, sell, and hold stocks and ETFs and AI managed smartfolios. But here's the best part about it, everybody that is an IRA Club client. There is a 0 asset fee. IRA Club does not charge you anything. Okay, why? Because I don't want you to shift your money back over to Fidelity, Vanguard, and Schwab. I'm trying to keep this here with you guys so you guys could do whatever you want with the IRA Club. We're not charging for it. Maybe in the future, who knows, but it's not going to be something drastic. But I'm trying to help out our IRA Club clients. With that being said, if you use the AI Smartfolios, this is where I want Lee or Randy, please break down your fee structure, which is also flat but tiered.
Yeah. Randy, go ahead. And I'm not sure if Brian got the response that you just sent him. So if you want to cover that too.
Oh, okay. So Brian, you asked the question that if you put in non-IRA money, do you have to have another flip account? Yes, you cannot mingle those funds. That is not allowed. However, we do not charge you for that second account. The broker will charge you still a flat fee based on combined assets. So say you have $10,000 in one and $100,000 in the other, then you would have and you could have 10 more accounts. You would never pay more than the top broker fee, which is $140 a month for that, which is much less than what you would pay traditionally.
So if you were to break this down, Randy, so if we're not charging the 195 asset fee, how is it based? How does iFlip make its money?
Okay, so here's how it works, and the part of this has to be let me explain the software. There's two components to this. The software company, which is a flat $7 a month, period, no matter what. That's the software company. Now we got to update some of these numbers on here, Ramez, a little bit. So
No problem.
you see where it says 17, 47, 97, 147 across the top there. So 7 will come out of that. So for instance, when you're $10 to $25,000, you're paying a $7 software fee and a $10 brokerage wrap fee. That has to be charged by the broker. We are not allowed to charge it. Our lovely people in the government came to us and said, we are not an advisor. We are not a broker. We cannot charge a different fee based on assets. So therefore, that fee is now being charged by the broker. The actual number is correct. Up to 25 is 17, up to 50, 47, up to 197, over 100, 147. And to put that into perspective on the cost, advisory costs are 1 to 2%, maybe a little more depending on accounts. We're working with a guy from a well-known brokerage house that in 2022, he had $5 million. 2022 was a horrible year. He lost 20% and paid $55,000 in fees. In complete comparison, same stocks on our platform, he would have lost 3% and paid $1,617 in fees. So that's the idea. We want to be almost egregious on the less expensive side.
So just to be clear, like just for, again, IRA Club clients that are listening, Fidelity, Vanguard, and Schwab, again, because we stare at these statements all day, I'm telling you what the national average is. Something, again, they could go Google yourself. For every $100,000, they are taking a bare minimum of $1,500 from you. That is the national average. If it's an employer's 401k, it is drastically higher, just an FYI, okay? So if you have 100,000 or 200,000 or 1 million or 5 million, what is the most that they could take from you, meaning iFlip, the tech company? It's $147 a month, okay? So that is why this is so beneficial for IRA Club clients and anybody that wants to utilize retirement dollars within the stock market here at the IRA Club. Is we believe in flat fees. That's what we're after. That's why this is so great for our clients, okay? Now, Lee, let's go ahead and break into how easy is it to go ahead and access the account. Number one, if you want to schedule a demo with Lee, you just so happen to join us a little bit later, feel free to go to iraclub.com and you could schedule a demo with Lee directly by clicking on this link. Otherwise, if you are a client, you're going to click here. You're going to log into your trading platform. It's your email is your username, the same one that you use at the IRA Club. And then you would have to create your password. Correct me if I'm wrong, Lee.
Yeah.
Okay.
I did want to touch on this. So yeah, so when you guys are opting in, and you can correct me if I'm wrong, they're using the same email address that you have with the IRA Club. So,
Correct.
but they probably, one, can't, and two, won't set up a password for you for security reasons. So what you'll do is you'll come here, just like Ramez has his email in the email address little box there. Just click on forgot password, and basically we'll send you a code so that you can set up your password. So you'll have to do this the first time. If you can't log into your iFlip account, just do forgot password. We'll get you all situated. You'll be able to log in. So
and
go
I'll
ahead.
tell you, yeah, and Lee, I didn't mean to cut you off. And the reasons why is you guys will receive an email, okay, from iFlip saying that your trading platform is now available, but we have a lot of clients that reach out to us and say they never reached out to it, or it went to their junk or spam folder. And I understand that some of you think it's junk and you're just going to delete it because you have no idea. Sometimes maybe conflict of interest. I have no idea who Iflip is. You guys only recognize IRA Club. That is part of our welcome pamphlet, welcome phone call, explaining to our clients that yes, you do have a trading platform, and this is how to go ahead and change your password, or you could click on the link. But just in case, you could click on forget password. The email is always your username. Okay. The same one at IRA Club that you use. Once you put in your password, it will take you straight to your IRA Club account. Now, this is a test account that I just so happened to do. I would say, and I'll let you see it. I put exactly $10,000 in there, exactly September 17th, 2021, which was 3 years ago. Okay. Year to date, these are my returns. Okay. You could actually see that the day that I started and I never put a single dollar inside of that. So what's funny is, Randy, you talked about this in 2022. The markets were unbelievably volatile. Most employers' 401ks, and I'll actually even show you this firsthand, back in 2022 lost 23% according to Fidelity, Vanguard, or Schwab. Okay. You could literally go Google this yourself. I just so happen to say, how much did my 401k or IRA lose in 2022? Here are the numbers. Okay. According to Fidelity. Okay. Now, if you take a look at these AI smart folios, this one's mine in particular, and these are the smart folios that I have, I lost 1% because this is what Randy was talking about. This is what Lee's talking about. Its job is to protect you against volatility. Okay. The following year, I went up 15%. You could literally see it. But now one of the questions that people ask me is, how the heck did you get to 34%? And honestly, you get paid some of these AI smart folios. And Lee, maybe you want to talk about this a little bit, but the AI smart folios that you see here, you can see what they're invested in, right? Here's the balanced portfolio. You can see what they're invested in. And how did I get to that 34% marker?
Yeah, so a couple things, because those two that you just showed, they all pay dividends.
Yep.
One thing that's probably, I think, Ramez, you've heard it, but maybe no one else. Very soon, dividends will be automatically reinvested into the smartfolio. So, say ExxonMobil and the red oil portfolio, that'll automatically be reinvested. What happens now is it pays the dividend. The dividend is maybe obviously cash, and that will go into your buying power. So that second line where Ramez is pointing towards, under the total account value, think of buying power as like the cash in your account. So another example of that is when you send over your deposit from the IRA Club to your iFlip account, it'll be in your buying power there. So one maybe misconception that people have is when they send their money over that we just automatically invest it for them. That's not true. We're just like the IRA Club in that we can't pick the smartfolio for you, just like they can't pick the investment for you. So you do have to click the buttons. I mean, happy to schedule a call with you and explain everything so you're comfortable with it. But again, we can't put the money into any smartfolio for you. So if you see buying power in your account and you're wondering why your money's not working for you, be sure to go to the invest button right where Ramez is right now. Pick whichever ones that you want, and then the AI can take it from there.
And Mallory, this is what Randy was talking about. You could see a breakdown of year to year and what these smartfolios, how they produce.
And while you're here, just scroll to the bottom for me on this portfolio.
Yep.
So we even give you visibility of what's inside of the smartfolio as well. So this one has, I think it's 19 things in it. While we're also here, everything that has that orange dot in the top right corner of the symbol, that means that the AI currently has us invested into that stock. So that's one way of knowing. You're also showing the little triangle on the right. That's another way to see what you currently own. So just while we're on these pages, I just wanted to let you guys know where a couple things are. And we'll go over a lot of this in a demo as well if you guys schedule that with me. But this is all good for everyone to know as well.
So how are you going to fund this, Lee? What do we have to do?
So we'll click on funding, and you guys are special people, so we gave you special options. So these two buttons are just for you guys. So it's pretty self-explanatory. Move cash. Do you want to move cash from IRA Club to iFlip or vice versa? Just click on that button. Go ahead. You'll go continue here. This will go to the IRA Club site. This will basically, once you fill this page in, it'll take you to a hello assign form. If you want to go to the next page and just
Yeah.
go ahead.
Again, it just, sorry, forgive me. I don't have my IRA club account number on
You're
hand,
good.
but you would put it in, put the amount that you want to transfer over, 500, 1,000, 5,000, 10,000, whatever the rental income may be. You could move that over. Again, it takes 1 to 2 business days for it to post to your trading account. And then once you hit next, you're going to initial sign and the money moves out. Now, if you want to, let me go back. If you want to move money, back to, let's say you found a house on 123 Green Street. And this is what we were just talking about with one of the IRA Club clients. I forgot who asked that question. Yes, you could move cash from iFlip back to IRA Club to go buy that house or that multifamily. But this is the point, is your money's constantly working for you, right? You just, once you sell off the Smartfolio or the stocks, you literally just put in that amount in there. So for example, I have $31 inside. I believe, Lee, these are the dividends that I have.
Most likely, yeah.
Yes, and then you would just literally put in that amount and just transfer the money right back over to your IRA Club account. But that's how easy it is to move money back and forth. Okay. I'm gonna let the questions come through because we have about 10 minutes left.
I can answer the first one if you'd like. Jane's question. I was starting to type out a response, but
yes. Is the iFlip account covered by SIPC?
Yep. So SIPC insurance, for anyone who doesn't know, is similar to FDIC insurance for banks. It protects your money in case something happens to the broker dealer. In this case, the broker dealer. FDIC would be for the banks. Since, as Randy said, iFlip is not a broker dealer, we're the software. However, the brokerage accounts that you set up are all SIPC insured. The one sentence way I explain it is your money's as safe on our platform through our broker dealers as it is with Schwab, Fidelity, you name it. They just have the big brand awareness that we don't yet have.
All right. And this is what Lee was I'm so sorry, Randy was referring to. Please forgive me. I'm going to shift over. Sorry, the little, how do I move this out of the way? There we go. So this is what he was referring to. You could have multiple accounts, okay? Roth, cash, simple, and this does not change, meaning the fee structure. It is still 0 to 10%. I'm sorry, 0 to 10,000, 10,000 to 25,000. So, and Randy, if I'm explaining this wrong, so you could have as many accounts as you want, but it's going off of the net value, right? Between the 3 accounts is what determines what amount is being charged. Correct me if I'm wrong.
Yeah, that's correct. So it looks like he got a call that he had to take. So the example he gave, say you had 2 accounts that were $75,000 each, that would add to 150. So it'd be one fee for 147 rather than 2 fees at 97 each. So, and what the only part he didn't touch on was how unique it is that we cap it out at 147 a month. Like if you're in an AUM model, as your account grows, you pay more and more and more in fees. Whereas with us, that percentage actually decreases the more your account grows. So it doesn't disincentivize you to grow your account, which, let's be honest, it's great for everyone when your accounts are doing well.
Okay. So Ken asks, so 10K investments example over 4 years shows approximately 8% in gains per 4 years, correct?
That could be true, Ken. I'm not trying to dodge your question, but the last 4 years have all been abnormal. Some abnormally great and making 23%, some abnormally bad and making 20%. That'd be a tough one to average out. And that's in a buy and hold, and I hope I'm not misconstruing your question. And again, it does depend on the portfolio. Like balanced has probably done better than, say, conservative over the last couple of years because the market's been pretty good. But that could obviously change. The market doesn't do well, then maybe conservative does better. It all depends on a lot of factors.
And then somebody asks, can you explain the difference between the core and the ones below and the customized?
Definitely. So I think of the core strategies as like the easy buttons. Let me step back for a second. We have a lot of people that are very savvy that use the platform. We also have a ton that are barely familiar with the stock market. But what I think everyone has in common is they understand how aggressive or conservative they might be as an investor. So if you're like, hey, I'm an aggressive person, you can just quite simply pick the aggressive portfolio. We basically create these portfolios to what's the right way to say this? Aggressive would be just that for the aggressive investor. The AI is going to dictate certain allocation percentages and a whole number of other things to build that aggressive portfolio for you. The reverse would also be true for conservative. Now, on the additive smartfolios, they're typically more specific to an industry, a sector, or like a specific use case. Like the top right one, money market, you could think of that kind of like a high yield savings account. It pays a dividend every single month, somewhere around 4.5 or 5% annualized. So it's not going to get you rich, but it locks in a guaranteed return. And some people really like that. The newest one is the Iflip one, which is in the middle. So there was a new Bitcoin ETF released to the market about 2 or 3 months ago called the IBIT. This one's pretty unique, and not to go too into the weeds of it, but basically it's the same ticker that makes up the whole portfolio, but 50% of that is managed by the AI, 50% of it is in a buy and hold. So it's basically exposure to Bitcoin in the crypto markets with half the risk, because of all the volatility, and a couple other things I won't get into. What else? Go ahead.
Jim just is asking for the pricing. Is that for just what is sent for investing, so gains and losses wouldn't affect the monthly cost?
Good question. So like this is the second week. So say right about now we're billing for the prior month. So we would just look at your highest balance over the month, over that month. So say it was, 15,000, you'd be on the $17 a month plan. Again, as Randy said, 7 would be from us, 10 from the broker side. So it does include gains and losses as well. Yes, it's not just the amount that is sent over.
Got it. A question: can the fees be put on a credit card?
Definitely.
100% you should, especially if you have a Roth.
Yeah, I actually, after our last webinar, I went onto your website and did the calculator, and I was just kind of curious because we all know how important it is to keep tax-free growth money in the account. But I just even put our fee structure in there, which was it's very, very inexpensive. And just the amount of money over 10 or 20 years that you basically are losing by taking fees out of your account is just astronomical. So
yeah, we were talking about these comparative. Yeah, it's not a joke. I mean, people don't really get it. And something that I actually do want to talk a little bit about is thumbs up. How many of you have a child under the age of 18 or a grandchild? Give me a thumbs up. We got a 1, 2, 2. Only 2 people. Oh, 2. Okay, we got 2 people. Highly recommend that you open up 3. All right, we have a highly recommend that you guys open up. Now they're coming through. Highly recommend that you consider opening up a Roth IRA account for anybody under the age of 18. The greatest gift that you could give a child or grandchild is a Roth IRA account. Okay. Let's just give you a hypothetical example. And Lee, if you don't mind me asking, what would you say the average, if you just take the averages of all the smartfolios, roughly what would they be? Somewhere between 12 to 15%. I think you guys were talking a little bit about that.
Yeah. So as someone, and I think it was, maybe your name was Mallory, I forget, I apologize,
Mallory.
but she was saying the S&P average is around 7 to 9, I would say. On our smartfolios, it's probably slightly higher than that. But again, you could have a 2022 year where the market loses 20 and we're happy to only lose 3%. So you have to take average with a grain of salt. But I would say, yeah, it does average out to, depending on all the factors, something in the low double digits.
Okay, so let's say the 12%, right? And let's just say a starting balance of $2,500. So if you have the ability to open up a Roth IRA account for a minor, put $2,500, and if you could just make an annual contribution of $1,200, okay? And let's say that child is 15 years old and they want to retire at the age of 60 or 59 and a half was when you could officially put that in. And the expected rate of return, we said, Lee, roughly about 12%. Fair?
Yeah. Yeah.
All right. Calculate. You're talking about $2.2 trillion tax free. saving $841,000 in taxes. So please think about doing this for your children and just let the AI take over for your, child or grandchild. But to be clear, Lee, the mother and or father or the guardian of the IRA or the minor account must have an iFlip account, correct? In order to access.
Correct.
Okay. All right. Thanks for the kind words, Chris. Hope all is well. All right. Okay. We answered that question. All right, done. So just to make sure that we're back to square one, step number one, if you're an old IRA Club client, you have to opt in. This is absolutely for free. We do not charge an asset fee of $195 for this. This is for our clients. Whether you decide to use this or not, please feel free to do so. Or choose your own stocks. That's up to you to decide, or your AI Smartfolios. And then once you do that, I just showed you how easy it is to move money back and forth. Okay, you guys decide. And if something just does not make sense, just hypothetical scenario, does not make sense, please feel free to reach out to Lee. Okay. And let him break everything down for you as far as, which Smartfolio, talk about risk tolerance. I know he can't choose the investment like IRA Club, but he really understands these Smartfolios inside and out. And Lee is IRA Club's point of contact, which means all IRA Club clients, that's your point of contact, okay? Lee and Lourdes is the other point of contact for IRA Club. Lee, if you also if you can put in an IRA Club, I'm so sorry, for IRA Club clients, Lourdes's information in there, maybe just her email.
Yeah.
Because I know you travel all over the country with Randy. So if there is an emergency or something, and there are current IRA Club clients that are already using this, Lourdes is another point of contact for IRA Club clients. We made sure to ask that on behalf of our team. Can a parent have an account for, can a parent have an account for an adult over 18? Absolutely. Absolutely. But just keep in mind for Lawrence. Thank you. Lourdes is so wonderful. Thanks, Brian. But yeah, just keep in mind that your child, although in our eyes, our children are always going to be our children, is officially an adult, which means that individual is going to have to establish an account first. Okay. So if you go to iraclub.com, and you start your account by going here and just go through the process, keep in mind when he opens up a plan, make sure it's a Roth for the individual and just go through the process. Okay. Now, when he completes the actual form, this is exactly what's going to happen. He's going to receive an IRA Club account. He's going to receive a trading account. He's going to receive a welcome phone call and a welcome email and a welcome guide. So what we want him to do is to understand what are his options. And if iFlip is the option, okay, we're going to open it, he's going to fund it, and then we're going to move the money over to the trading platform, and he will choose the Smartfolio, okay? And just let it do its thing. If all you're using is the trading account, there is not a $500 minimum balance. I want to be clear for IRA Club clients. If that's all you're using is the trading platform with iFlip. If you do have an alternative investment, you have to keep a $500 minimum balance to protect the IRA or 401k or HSA account, okay? Or any qualified retirement account that we open. Just want to make that very clear. It's there to protect you from doing a prohibited transaction. Hope all this makes sense to everybody.
Can I just add one thing on that? So for the child over 18, so it's actually honestly easier on our end because we'll set the account up in their name. However, if it's a minor account for someone who's say 10 years old, it'll be in the name of the parent for the benefit of the kid. So it's actually easier when they are over 18, but it's nice to be able to start them investing young if they are under 18. It's just a slightly different process from our end.
100% agree with you. I hope this was very informative. Really, again, this is for our clients.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.